Hi, everyone. Today on Cattlemen Talk, we're going to be discussing Oregon's new CAT tax, which stands for Commercial Activities Tax. And this is going to be taxing commercial activities that exceed $1 million each year. So to talk about this, we have Oregon Cattlemen's Association's accountant, Kari Ott. She's also with the Oster Professional Group in Burns, Oregon. And we're going to dive right in and talk about this and learn a little bit more about what to expect in this coming year.
Tax, so it's based off of the actual revenues, not on your profits. And so that's kind of the biggest thing. That's a new kind of a tax in Oregon. If you have over $750,000 in revenues, then you are required to register, or you're required to register, but you don't pay any tax until you're over $1 million in revenues. So and they have penalties if you don't register when you're supposed to. You have to register within 30 days of meeting the 750,000. And if you don't register, you can have a $100 per month penalty or up to $1,000 per year. Mm-hmm. So and also if you don't pay your quarterlies, you have a penalty. So there's lots of penalties involved. So people that have under $1 million, they won't pay any tax, but however, it's going to affect you in other ways, such as, you buy stuff from a feed store, they might be over $1 million, they're going to pass that cost on to you. Or vaccines. I know I have a feed store client who's getting vaccines in, and they've already seen that itemized on their bill as the Oregon CAT tax. And so it may hit you more than once, actually, is the rough part. So the amount of tax is, so it's 0.57%. So basically a little over 0.5% plus $250 for taxable commercial activity. And so they define that as taking your total Oregon commercial activities, your total Oregon sales, basically, and you can take out, they have a subtraction of either the cost inputs or labor at 35% of that. And so that's how I calculate that tax. The cost inputs is where it gets kind of confusing, especially for ranchers, is because they have a very broad definition. And so they consider that cost of goods sold. However, most of our ranchers and most people are under $26 million revenue and can file on a cash basis. And so you don't even claim cost of goods sold. So what they're saying right now, there's a House bill actually in process right now. And what they want to do with that is saying that it's all operating expenses besides labor costs. And so that's the biggest thing, is what exactly is your operating expenses. We would argue that pretty much all expenses are operating expenses, including equipment you purchase, because it all goes in. You might have a few fees like an accounting fee, that kind of stuff. That's just an admin fee, but really ranchers don't have a whole lot of non-direct costs. So we're trying to work with the Department of Revenue and lobbyists in order to do a simplified method where it'd be a certain percentage of your entire cost you could take as a safe harbor. And so then you wouldn't have to calculate it, and it would be a little bit easier. But so far that hasn't seen any talk. And part of it is they're waiting on this House bill to pass, because they're changing that House bill will change it to direct costs of your operating expenses without labor costs is what they count as that. So it's there's a lot of stuff still up in the air, but we're required to be filing stuff now. You have to file as soon as you hit $750,000. You have to pay an estimated payment if you think you're going to owe tax. So those are due April 30th, July 31st, October 31st, and January 31st. And the 2020 return will be due April 15th, just like your personal return. So, there's a lot of questions still unanswered. There's a lot of penalties that could possibly be assessed. Some of them may be forgiven because of COVID, but it's hard to say. Yeah. So that's just kind of a very basic overview, real fast.
Wow, yeah. So I know one question I've heard around is, well, if you're bringing in $1 million or upwards of $750,000, shouldn't you be able to pay that tax? But I think what a lot of people don't understand is, such as with feed stores, is that it's moving revenue. So can you talk a little bit about that and just how it really does impact the individual and the individual business?
Yeah, because you could have $1 million in revenue or $10 million in revenue and still be operating at a loss. Mm-hmm. And if your costs are more, or you make a big investment into some property or that kind of thing, and so you're operating at a loss, but then you still have to pay you know, the 0.57% of the tax, and you have no cash flow.
Yeah.
So.
And so has there been any answers for how to handle that? I mean, like you've mentioned, there's a bill going on right now, but I mean, what are people doing? What are you hearing out in the countryside?
You know, I'm not hearing a lot besides people don't want to do it, of course.
Yeah.
And I can't blame that, you know, because for every business, basically, unless, you know, they have a few exceptions, but a lot of places have sales tax. And so it's almost similar to that kind of stuff, except for there's usually exceptions for agriculture. And there's nothing besides milk and agriculture cooperatives. Those are exempt from this tax. But besides that, there's not really any exemptions at all. So,
Okay.
and, you know, and the rules are just still coming out. And, you know, people in my profession or other places are still confused about it just as much as everybody else, because we're learning along with everybody else. But
Still learning along the way. Yeah. And this was this was approved just last year, right?
yeah. Yep. And so that's why it started. It was effective January 1st of 2020. That's when it started.
And can you say the dates again for what was it, the quarterlies?
Yes. So the quarterly due dates are April 30th, July 31st, October 31st, and January 31st. So they're basically the same as like if somebody did payroll or payroll quarterly dates. So basically activity from January through March of 2020, your estimated payment would be due April 30th of 2020. So the month after that first quarter. And registration's fairly simple. Actually, it's through Revenue Online, and you just go in and sign up for an account. So that's the simple part of it. It's just you have to manually calculate your estimates also based on what you think you're going to be owing at the end of the year.
Right. Okay. So like you said, people in your own profession are having a difficult time with this. If there's farmers or ranchers or business owners out there who don't know the first step to take, what would your advice be? What's their first step of learning what they owe or who they should go to? Or
you know, yeah, first, if you're getting into that $750,000 revenues, you need to register. But then I would recommend talking to your accountant or something like that, just calculate it. Hopefully it'll get easier later, but right now there's so much up in the air, it's a little bit tough. I've done clients, I just put their stuff in a spreadsheet and try to do the best you can. As long as you do the best you can, hopefully you get out of penalties, because as long as you pay 80% of the tax, you're out of the penalties. And so even with the moving targets, we hopefully will be fine on that.
So pay at least 80% and then.
Yeah, exactly. Because if you pay at least 80%, you don't have penalties. That's what they're saying right now. So.
All right, well, that's good. Yeah, I think this is going to be hard to navigate moving forward, and it's definitely with your help and accountants like you that everybody will be able to handle it a little bit easier and a little bit better. Like you mentioned, there's a bill going on right now, so we'll see what new information comes from that or new rules.
And most of that's just more definitions. And so it's not really any change in how they calculate or anything like that. Just kind of a lot of definitions of direct, and then they have some milk stuff in there too.
I would just like to thank Kari for coming on and talking about this important issue. It's very important to a lot of our business owners. Even though there's cash revenue, it's cash flow as well. And so we have to be prepared for what's coming in the future and how this is really going to impact businesses in Oregon, specifically in the agricultural community. And hopefully we can speak up together and continue to oppose this tax, which is going to hurt a lot of small businesses and a lot of family-owned businesses throughout the state. But for now, we'll keep you updated as we learn more information. Thank you. Have a good day.